Larry Fink, the CEO of BlackRock, has just said some pretty shocking things about Bitcoin on national TV, of all things. We're going to be talking about that. Also, really, I just want to dive into this Bitcoin ETF situation because it's really massive. Also, we're going to talk a little bit about Michael Saylor's crazy Bitcoin bet, buying Bitcoin once again, of course, diving into some Bitcoin price charts, some Bitcoin on-chain charts, and of course, recession. Will we or won't we? Can we decide already? All of that and more in today's stream. Also, make sure to stick around till the end. I'll try and answer a few questions at the end of the stream today. BlackRock, the big story. Larry Fink, the CEO, has just said some pretty crazy stuff about Bitcoin. So let's talk about it. You can see right here, Larry Fink says crypto is digitizing gold and the BlackRock's Bitcoin ETF could help make the sector more democratized. Okay, that's very, very exciting. You see, what is going on right now with BlackRock, they're trying to get a Bitcoin ETF, and BlackRock gets Bitcoin ETFs. They've had 575 Bitcoin, not Bitcoin, all ETFs approved, 575 different ETFs approved, and only one ETF not approved. Now, that is a pretty damn good track record, if you ask me. Now, to have Larry Fink coming out saying, hey, you know what? Bitcoin is digital gold. That's pretty damn big. This guy is the CEO of the biggest asset manager in the world. What he says is important. What he says is relevant. People listen when he speaks. It's a damn big deal to see BlackRock getting into the Bitcoin ETF scene. And to have now Larry out there publicly talking about how Bitcoin's basically digital gold. Nice. Welcome to the party, Larry, by the way. We've only been saying that Bitcoin's digital gold for the past, ever, basically. Also, check this out here. This is something I posted earlier. So this man, Larry Fink, who is Larry Fink? He is the boss of people like Gary Gensler. He is the boss of people like Elizabeth Warren. This man now likes Bitcoin. Now, he's been talking about crypto for a while. Of course, BlackRock launched their Bitcoin private fund back about August or maybe September last year, just before the bottom came in for the bear market. They also added Bitcoin to their global macro fund. And now, of course, they're pursuing a Bitcoin ETF, and they are going to get it because they are BlackRock. Because they are BlackRock. This man, Larry Fink, is going to pump our bags. But this man, we must remember, is not our friend. BlackRock has the power to pump our bags to high heavens. And who doesn't want to see their bags pump? Everybody wants to see their bags pump. But you have to keep it real. BlackRock is not here for you. They're not here for me. BlackRock's here for BlackRock. BlackRock is here to control, capture, manipulate, and do everything that they traditionally do in markets. BlackRock's not your friend. JP Morgan's not your friend. Goldman Sachs is not your friend. Fidelity's not your friend. None of these organizations are here for us. They're not our friends, but they will pump our bags. So I'm here for that. Let's get excited about that, I suppose. Now, it's been pretty crazy over the last week because we have seen an incredible amount of financial giants filing for spot Bitcoin ETFs. Of course, BlackRock kicked it off, and then we saw a big rush of companies largely reapplying for Bitcoin ETFs, but also some applying anew. So we had Fidelity, $4.5 trillion asset manager, BlackRock for $10 trillion, by the way. We saw ARK Invest, together with 21 shares, refiling their Bitcoin ETF application. Wisdom Tree, Valkyrie, Bitwise, and Invesco, $1.5 trillion asset manager as well. Spot Bitcoin ETFs. What is very, very important to understand here is that all of these will require Bitcoin behind them. So if they want to have 10,000 Bitcoin worth of Bitcoin ETF products at BlackRock, for example, they're going to need to buy 10,000 Bitcoin off of the spot markets and move it over. Canadian Bitcoin ETFs, for example, have seen tens of thousands of Bitcoin sucked into the vortex of these Bitcoin ETF products. And Canada's only about 2% of the global equity markets. US capital markets are about 52 to 54%, depending on the day, of global equity markets. So kind of a bit of a bigger deal seeing all these massive players, the biggest of big players in financial markets, all pursuing a Bitcoin ETF product. So pretty gosh darn exciting. Now, some Bitcoin ETF thoughts here for you. I love this picture, by the way. The proposal in of itself is enough to really light markets up, to get everyone very, very excited, right? If we get an approval, that would send markets absolutely freaking wild. If we get a denial, that's probably going to tank markets. Although we're just going to see them renegotiate and reapply. And we've seen plenty of denials before. The BlackRock denial would just be the latest in a long string of denials, but BlackRock doesn't like getting denied. I would imagine that BlackRock, if they were to get denied by an overzealous SEC, they're going to put in some phone calls to the right people in the right places, and we will see things happen, because that's the kind of organization that they are. Listing, when it happens, this, I think, will be a sell the news event, much like we saw with gold ETFs back in the early 2000s, much like we saw with the CBOE and the CME Bitcoin futures contracts in 2017. The release of those basically marked the top of the market. And also we saw, for example, like the Coinbase IPO, April 2021, basically marking the top of the market. So we have these big, big events that get the entire market bullish, the entire market to be excited about what's happening. And then it happens, and, sell the news. El Salvador legalizing Bitcoin as, legal tender in the country. Incredible news. And that marked the top in late 2021, right? That was a big sell the news event, if there ever was one. So when we do eventually get a Bitcoin ETF listing, I expect, once again, we're going to see a sell the news event coming into play here. However, long-term bullish, because keep in mind, they got to buy real Bitcoin to back all this stuff. So if we have 100,000 Bitcoin ETF products, or 100,000 Bitcoin backing all of these Bitcoin ETF products, that all has to be bought off the open markets. There's only around 2 million coins currently sitting on the market. That means the number will go up, essentially. Now, if we're looking at an approximate timeline for all of this stuff to be taking place here, this is currently the calendar that we're looking at. So, of course, they filed back in mid-June there. Late June, they had a filing published on the Federal Register for comments. August 12th, we're going to have an approved, deny, or extend for 45 days from the SEC. We'll see what their decision is. September 26th, another approve, deny, extend option for 90 days. December 25th, 2023, approve, deny, extend for 60 more days. And 23 February 2024 is the final deadline when the SEC has to either crap or get off the pot and say, hey, we're either going to approve or deny your application here. And then, of course, the following month, what do we have? The Bitcoin halving. I mean, if it got pushed out that far, it would coincide so well, it would be ridiculous. Ridiculous. So we shall see. Now, also to keep in mind, this is the filing dates and deadline dates for all of the different applications we see in right now. ARK's 21 shares Bitcoin ETF up first here, December 27th, 2023. They are first in line, essentially, for a final deadline from the SEC, with a whole bunch of different filings going right through March 2024. So imagine if all of them get approved and we see the SEC allow 7 or 8 different Bitcoin ETF products to come out. I mean, this would be extraordinarily big news. It would all align perfectly with the Bitcoin halving narrative next year. It would just explode markets, because you see Bitcoin halving plus a bunch of Bitcoin ETF products coming out. It's hard to imagine a more bullish scenario, right? Also, to keep in mind, some people are kind of saying, well, Bitcoin ETF may not actually be that big of a deal. Bitcoin ETFs are a damn big deal, because a lot of people aren't going to go and buy Bitcoin on Coinbase. They're just not, but they are interested in Bitcoin, and it will, of course, then get added into bigger bundle ETF products, right? A lot of people want to, get money into their pensions, their retirement accounts, their 401ks, their IRAs, whatever kind of stuff they have, right? And a Bitcoin ETF product is going to allow them to do that. Remember, there's like tens of trillions of dollars in retirement accounts in the USA. even a fraction of that money starting to get exposure to Bitcoin via ETF products would be absolutely freaking huge. So the implications here for these ETF products, again, in a capital market that accounts for over 50% of global capital markets, is massive. Not only will we see it going into retirement accounts, we're going to see it added into new ETF products, right? They'll bundle it up and put it with other stuff and so on and so forth. It will be massive, allow for a whole new level of speculation in the asset. Also, hear me now, quote me later, but I imagine that once we get a Bitcoin ETF approval from BlackRock, we're going to see an Ethereum ETF following not too far behind. So definitely something to keep an eye out for there. Now, some ideas of how we could see things playing out here, maybe a BlackRock ETF. Maybe just the application itself is enough to pump the market up to, well, that $45,000 to $48,000 range that I've been talking about a lot. Maybe we'll finally see 48K this year. That would, of course, align with about a 30% under previous all-time high, which has happened in 2 of the previous cycles. So be a logical area to keep an eye out for. Obviously, if we see everything align, then next year is going to be very, very exciting. 2024, we have all these ETF applications approved where we have the Bitcoin halving happening. Of course, then leading us into our blow off top sometime late in 2024, or perhaps into early 2025 or mid 2025, but there will be that blow off top. Now, before we get into the rest of the Bitcoin ETF news, just a reminder, if you're not signed up for my newsletter yet, you got to get it checked out. It's called Wealth Mastery. It's a cryptocurrency investor report. My team and I spend about 40 hours a week putting this thing together for you to read in about 10 minutes in a quick email. The latest news, the latest happening with DeFi, NFTs, altcoins, airdrops. One of the airdrops that we covered recently was Maverick. This is a new exchange, a decentralized exchange. We covered this in a tutorial, and had you done the tutorial and participated, some people got $6,000 to $8,000, $6,000 to $8,000. So that's crazy stuff. Definitely check it out. If you're not signed up yet, there's a link in the description here. Now, this is something I like what Jay had to say here, because this is pretty interesting. There's a series of trades that are talked about again and again. Burry and the Big Short. Soros is bet against the pound. But there's one happening right now that we're all witnessing. It's Saylor's move of short fiat long BTC pair trade. It's pretty gosh darn interesting. I think that what Michael Saylor is doing at MicroStrategy could go down as one of like the bet of bets. So last week, MicroStrategy bought another 12,333 Bitcoin for $347 million, an average price of $28,136 per coin. My only question is, like, how is there any office furniture at all left at the MicroStrategy office? Like, they must have sold everything. Tear the copper out of the wires, sell it all. We're buying Bitcoin, guys. It's crazy, crazy stuff, man. Absolute crazy. MicroStrategy is taking stacking Bitcoin to like the extremes here. And you have to keep in mind the numbers, because the numbers are absolutely insane that they have right now. They now have 152,000 Bitcoin. They spent $4.5 billion on their Bitcoin, an average price of $29,668 per Bitcoin, meaning they're currently just in profit, right? However, let's fast forward to a world where all the biggest asset managers are releasing Bitcoin ETF products, right? Where we see massive scarcity kicking, or we see central banks competing for, or we see countries mining Bitcoin, where we see more countries make it legal tender, or we see more cities make it legal tender, or we see an increased adoption of Bitcoin all around the world for people to make cross-border payments and all this kind of stuff. What happens when Bitcoin's worth $500,000 per coin? What happens when Bitcoin's worth $1 million per coin? And MicroStrategy holds, well, currently 152,000 of them, and I don't think they're done stacking. I think MicroStrategy is going to buy a lot more Bitcoin. To put this into perspective for you, because this is very interesting. See, right now there's about 2.25 million Bitcoin sitting on exchanges. That is before MicroStrategy buys up the rest of it. That is before Fidelity and BlackRock and Invesco and all these other guys release their Bitcoin ETF products. MicroStrategy, when they bought 12,000 Bitcoin last week, that equaled around 0.6% of the remaining supply on exchanges. That may not sound like the biggest number, but that's just one company, one organization bought 0.6% of the remaining supply sitting on exchanges last week. That is actually pretty crazy when you think about it. There's just not enough cheap BTC for BlackRock and Fidelity and all these other guys to go around, right? Turbo scarcity is coming for Bitcoin, and it's coming a lot sooner than a lot of people think. I just keep stacking those sats, guys. Trying to keep my life simple. Trying to keep my life simple. Stack up that Bitcoin a little bit every week. Taking a long-term picture. We'll see how it plays out, of course. Now, let's move on here. Let's talk about some charts. So, a lot of stuff happening in the Bitcoin chart space. Some very interesting things on the daily, on the monthly, some great on-chain charts I want to share with you here as well, because we're seeing a lot of big stuff happening in the market with all the Bitcoin ETF news and all the excitement that's starting to be generated in the market around what we're seeing here, right? So it's very exciting to see this. So now let's dive in here and start taking a look at a few things. So one thing I want to start off with is actually the Litecoin halving. I know, Litecoin, I know, but it's only 27 days until the Litecoin halving. There's been a lot of play around this narrative starting to build up. And there's been, of course, a lot of price action moving on it. You see the EDX exchange, which is backed by Charles Schwab and other big players, as the institutional exchange where you can go and trade your crypto, right? Well, they're listing Bitcoin, Ethereum, Bitcoin Cash, and Litecoin, which has provided enough gas in the tank to get people a bit excited about Litecoin once again. They're also hanging on to that Litecoin halving narrative. Now, here's what happened during the last two Litecoin halvings. This is the first halving. This is the second halving. In both of these situations, we saw the price of Litecoin actually peak about 3 to 6 weeks before the actual halving happened. Right. So we saw this run up. Saw the momentum build up, the excitement build up. Litecoin halving is coming. And then we, of course, saw that inevitable price decline actually leading into the halving. This will be the third halving. But look at 2019. 2019, we saw Litecoin peak at $142 in June. 6 weeks later, at the day of the halving, the price was $92. So I'll be curious to see if that plays out or not. Again, in this situation where we see Litecoin actually kind of basically in this scenario, we'd see Litecoin potentially dumping into the halving, or will traders keep the narrative rolling until much closer to the halving date? And if so, of course, we probably will see a sell the news event, because halvings themselves are fundamentally bullish, but they don't create immediate bullish scenarios. It takes time for those things to play out. Now, let's take a look here at the Bitcoin chart. So this is on the daily. On the daily, we're seeing some interesting things happening. A bit of a cooling down, if you will, after that big move up in the previous weeks on all the excitement around the ETF news. Currently seeing the price cooling off just a little bit, still trading above the 50-day EMA, which is the yellow line on the chart here. However, I'd like to draw your attention to the fact that we are seeing a daily MACD bear cross forming up right here, where essentially that could indicate a bit of a further cooling off of prices. And it's happening in the area where generally, if you see it so high up, you're likely to see a bit of a price correction coming in the stochastic, also indicating that. Now, to be clear, we could easily see any kind of bullish narratives popping their heads up and pumping the price very, very quickly, right? The market's a bit of a powder keg right now, if you will. And any of this ETF news can easily either spook markets, as we saw when the SEC came out the other day and said, well, your filings are inadequate. And the market kind of panicked a little bit until people actually realized, well, they didn't say they're denying them. They just said it's inadequate. And please change the wording in your applications, which is what everybody immediately did. And now everything seems to be okay again. Now, if the SEC was just surprise us and come out very, very soon and say, hey, Bitcoin ETF approved, here's a listing date, that would make markets go absolutely crazy. But you can only keep the momentum going for so long around the hype of the Bitcoin ETF narrative without a Bitcoin ETF actually being approved. right? So that is something to keep in mind here. But let's have a look at the monthly charts. Let's have a look at the monthly charts here, because something interesting is happening here on the monthly charts that I want to point out for you. And that is particularly taking a look here at the MACD. So you can see here the 50-month EMA. Last month we came right down, had a nice little retest of that, which I like to see without a doubt. So we had the initial breakout here back in March, a retest in June, currently, of course, trading above that. Interestingly, though, we have got now our MACD monthly cross for Bitcoin. Now, this historically has been a pretty powerful indicator to say that the bear market's over, that a new cycle is beginning, and that things are about to get exciting again. It's not immediate. We're talking about monthly charts here, right? So monthly price action takes some time to play out, right? So just because we're getting that MACD cross now, that impact of starting a new bull run, that doesn't mean immediate price insanity. It means a new direction is being formed. And of course, this MACD indicator, it's kind of following behind what we've already seen happening in other indicators we've talked about here on the channel for some months now. Of course, we see the histogram has been trending upwards for a while. We finally got our green bar here. So that's all very, very nice to see, and I'm excited about it. Now, before we get into some of the on-chain charts here, if you are a trader, you need yourself an account over on BYBIT. It is the best place for trading crypto. You can get up to $30,000 in sign-up and deposit bonuses by using that link down below in the description. You can trade futures, spot altcoins, hop onto the popular copy trading service, and more. Check it out using the first link in the description. Now, this is a very interesting one that I found right here. This is from CryptoCon, and this is the Bitcoin Pi Cycle Top Indicator. As he says, it created the biggest bearish fake out of the yellow 111-day MA ever, right down here. So big fake out. But now it's fully recovered, and an ambitious target looms, $45,234. The green 350-day MA2 has been achieved for every mid, top, in every cycle. So you can see right back here, look, right back in 2016, hit our mid top. Back in 2012, hit our mid top. Back in 2019 as well. So if history rhymes, we all know history doesn't repeat, right? But if history does rhyme, then we could see Bitcoin rallying as high as $45,234 in 2023. My number's been 48,000. I think we overshoot that just a little bit and potentially get 48,000 perhaps in the next few months. So definitely something to watch out for. These indicators, so many of them keep showing similar things. Maybe they're all wrong, but maybe there is something to pay attention to here, which is what I've been doing, paying attention to these different indicators and what they are telling us here in the market. And of course, when that happens, when we do get, these price targets hit, I just want to share this story with you here, because this is from the NFT insanity, right? So this is from this guy. Hey, everyone, finally ran out of capital to pay down my loans and got liquidated last night on my remaining 3 apes. Been an insane ride from $20 million to negative $2 million. Good luck to all. I'm not going to make it, but I sincerely hope that you all do. Holy cow. Greed really screws us up when the bull market gets going. And so many people will fumble it. You're here now. And if you're here now, I want you to listen to this, because the only people who are going to get rich in the next cycle are the people who sell. It's that simple. Now, look, you can have different strategies and say, hey, look, I'm going to hold my Bitcoin for 10 years. Okay, it's different, right? But if you are in speculative stuff here, if you're in NFTs, if you're in a lot of these altcoins, remember, the vast majority of these altcoins are going to fail and go to zero. You got to click the sell button. I've just seen so many stories like this where somebody they're up millions, literally life-changing money, and they fumbled. This guy had 20 million bucks. 20 million bucks, man. Gone. It's absolute insanity. We saw a lot of these stories back at the height of NFT mania. People would get just absurd offers for their crypto punks or whatever. Some guy had like a $10 million offer. He turned it down. That same crypto punk's worth like, I don't know, $100,000, maybe $50,000 or $80,000. I haven't looked at the floor price of crypto punks in a while, but I let you know this because more bullish conditions will return to the markets at some point. And so it is beholden upon you, the person listening to this stream today, to remember, don't cheat yourself out of a fortune. At some point, you will need to sell something, right? Something. It's worth keeping in mind there. Remember, no one ever went broke taking profits. Now let's move on to this next chart here, because I like this. This is from Glassnode. They say, following the ascension in spot price with the psychologically key 30K level, Bitcoin miners have continued to send large clips of BTC to exchanges. Selling the Bitcoin, man. Currently, miners are sending $105 million to exchanges, the second largest USD denominated transfer on freaking record. The last time Bitcoin miners were dumping this much Bitcoin back in early 2021. Yo, that is pretty damn crazy. I mean, the Bitcoin miners have been sitting on their stacks for a while, and the prices are finally getting a little bit bullish, and they are just hardcore dumping Bitcoin right now. Now, this is very interesting because this rally has been, to an extent, dampened by that massive selling from Bitcoin miners. That means that when we see the miners slow their selling down significantly, if we can keep the hype and the narrative and the consistent buying happening from across the market, which we're seeing a lot of buying happening across the market, it creates a lot less friction for prices to move higher, because the Bitcoin miners are essentially shooting their load right now. And when prices go higher, they're not going to have that much ammunition left to suppress the prices in the market. So that's a pretty interesting thing I want to point out there for you. Currently, that's about 6% per day that the miners are selling. So once those miners are done selling, watch out for the bumpity pumps to potentially come on in. Also got this one here I want to share with you too, from Carl Menger. Now he's sharing a Glassnode chart here. And this is monthly absorption rates of Bitcoin from shrimp to fish. Now, these are small accounts, right? Those small accounts. These are people who have, a few hundred or a few $1,000s worth of Bitcoin. Now, what's interesting is that they're absorbing the equivalent of 254% of the mined Bitcoin supply over the past month, or about 2,286 Bitcoin per day. There's only 900 Bitcoin per day being mined on average. So that means that the smallest accounts are buying more Bitcoin than the Bitcoin miners can produce. So even though the Bitcoin miners just blasted out over $100 million of Bitcoin into this pump, we are seeing a situation where it's just not really mattering that much, right? The sellers are out, the forced sellers are out, a lot of liquidations are out, and we see this just fanatical buying by small accounts, mid-sized accounts, big accounts, everyone getting excited, everyone trying to front run BlackRock and Fidelity and Invesco and all these other big players. Everybody sees what's going on. Everybody wants to participate in this. Everybody understands, right? More and more people are waking up to the realities of fiat currency and the realities of what Bitcoin is and how scarce it is, and the fact that if they don't stack now, it's going to be a heck of a lot harder to stack later. Bitcoin is still on sale. Bitcoin is still under 50% from its all-time high price. Still a pretty attractive buy, in my opinion, which is why, again, I have been stacking up Bitcoin on a regular basis. Very interesting stuff that we are seeing here on chain. Let's talk about the potential for economic catastrophe now. A recession in the USA. Is it coming? Is it not coming? Does it matter if it does come? That's perhaps even the bigger question, right? We have so many people saying, well, if it comes, it's going to be the end of all things for markets, and we're all going to go to zero. And there'll be gnashing of teeth and pulling of hair. However, not everyone is so bearish. Fund Strats Tom Lee says the S&P 500 could surge up to a new all-time high before the end of the year, which you might say, well, that's crazy. But keep in mind, in 2019, what did we see happening? In 2019, we saw the S&P 500 hit multiple new all-time highs, while Bitcoin stayed well under its previous all-time high. So this is not without precedent to see such a situation like this happening. However, the guys over at Deutsche Bank, they want to put a bit of a hiatus on this, saying, no. U.S. recession chance is near 100%. It's almost definitely going to happen. And avoiding a hard landing by the Fed would be historically unprecedented. Okay, guys. Over at Morgan Stanley, stop worrying about a recession, guys. Come on, everyone's worrying about a recession. You need to worry about a recession. Jobs are resilient. The Fed's going to achieve a soft landing. It's all going to be good. Okay. It's a bit of an interesting situation. We have so many varied opinions on this. And who is going to be right? I guess we'll find out in hindsight, right? But we have a lot of people very firmly in the camp that, well, we are going to be running into a very, very bad economic situation. It's going to be the new Great Depression, to basically new all-time highs are just around the corner, and every opinion in between. And as we know, opinions are kind of like butts, right? Some look good, some don't look good, and some stink. What are you going to do? Butts, man. Now, I like Mike McGlone's thoughts here on Bitcoin. So we're going to share those with you before we get a bit more into the weeds on the recession, will we or won't we topic. But he says Bitcoin is 20,000 or 40,000. Well, facing the Fed, recession, NASDAQ, etc., potential launch of US ETFs won't shield Bitcoin from facing its first US recession, a potential equity bear market, and a vigilant central bank. Interesting. So I would generally agree that if we get a very, very bad recession, Bitcoin probably won't be shielded from that. However, the question is, are we going to get a bad recession, or if we do get a recession at all? Now, Alex Kruger shared some great thoughts on this. I want to share those and expand on them a little bit here. He said, most data points indicate a recession is coming. For example, today's consumer expectations are extremely pessimistic as they have been in previous recessionary periods. We are seeing the 10-year Treasury and the 2-year Treasury, basically the deepest yield curve inversion like ever, right? So that is screaming recession. Everything's gonna be bad, right? Haven't had a recession or a yield curve inversion this bad for 40 years or something like that. So it's pretty interesting, right? And so often we've seen this correlate with recessions, right? So will that come again? Everything's right until it's not, right? And this is one thing we always have to remember, is that just because something has done it in the past doesn't mean it will always do it in the future. History rhymes, but it does not necessarily repeat, right? Alex goes on to point out further, equities always bottom during strong recession. Traders often believe stocks always bottom during recessions. Historically, equities bottom either around monetary policy easing or reacceleration of economic activity. Stocks are expensive by many metrics. Is another thing that people are saying, well, stocks are too expensive right now. They simply have to come down, right? There's no reason for them to continue to be so high over earnings. He says, for example, the earnings yield of the S&P 500 12 months forward is now around the same levels that the yield on U.S. corporate investment grade bonds and the rate of 3-year treasury or 3-month treasuries. So maybe everything's just way too overvalued. And that's why we need to have, a recession come in and just crush it all and bring prices back down, right? That old sort of feeling, right? It's just like the meme. It's not the market that's wrong. I'm not wrong. It's the market, right? It's the market that's wrong. Come on, I got this, right? Yeah, I know that feeling. Alex will now point out the upcoming recession, if any, has been the most widely predicted recession in the history of civilization. Therefore, both markets and economic actors have front-run this recession, which by definition reduces the probability of it happening or the magnitude of it if it does happen, which is a pretty interesting thought. Economists and analysts lowered their forecasts in response, leading to one of the most important drivers of equity performance this year, economic activity consistently surprising to the upside, which has been something that's really been a pretty fascinating thing to watch. Every time we get like quarterly earnings reports coming out, they keep beating expectations. The economy is staying stubbornly resilient. I'm sure much to the chagrin of Jerome Powell, who's just there. Why we keep raising the rates? Why hasn't everything broken yet? The only thing Jerome broke was the banking system and all the crappy loans and policies of these banks. But the economy's staying pretty strong. Jobs are staying pretty resilient. Economic earnings of companies are staying pretty strong as well. So a lot of these indicators would say, well, actually, maybe recession's not coming. Or if it does, it's going to be a very short and shallow recession if we do get one. Check out this here. The view that risk assets must bottom if the U.S. enters a recession is also flawed due to the very limited sample size of U.S. recessions. Plenty of counterexamples exist outside of the USA. Now, this is really, really interesting as he points out what's happening in Germany. And it's such a great example because Germany just entered a recession, right? Yeah. And guess what happened to their stock market? New all-time high. So let's just compute that for a second. Germany entered a recession and its stock market hit a new all-time high. So it can and does happen. Could it happen in US markets? Absolutely, why not? We could easily see a recession come in Q4 of this year, but also Tom Lee could be right and the S&P 500 could hit a new all-time high. The two things historically have coincided where we see stock market slumps and recessions coincide together, but they don't have to. And there are plenty of examples of when they haven't. So it'll be interesting to see if that's what happens in US markets this time or not. Markets are forward looking and the AI revolution is real. It's also another great point. The world's undergoing an AI revolution comparable to the internet revolution or the industrial revolution. The impact of AI technology it's so hard to comprehend. We're seeing so much new stuff created almost on a daily basis right now. And it's honestly, it's hard to even keep up with everything that's happening in the AI scene at the moment. But it is very exciting. The AI, we're not even close to it being a massive bubble yet, right? We're so early. We're going to see so many IPOs coming out for AI companies. We're going to see so many crypto tokens launching AI stuff and on and on and on. We're only just beginning to see the implications of this. We're talking about trillions and trillions of dollars in value that is going to be created from the AI revolution, right? We're going to see a whole new just vertical of tech insanity happen here. This is a fundamental technology boom that is going to probably define the decade in a lot of ways. So definitely something to be paying attention to if you're not already, right? Analysts estimate that AI could replace up to 25% of current employment in developed countries. That's a lot of white-collar jobs in particular. But when Tesla and Elon Musk get their robots out, I think we're going to have to buy one, but also that it's going to replace a lot of sort of menial labor jobs. I think all the crap jobs that people really don't want to do, cleaning toilets, working in slaughterhouses, digging ditches, all that kind of stuff. Robots are going to come in and they're going to take our jobs. Robots are going to take our jobs. Genevieve pointed out here as well, last month, a record $5.3 trillion sat on the sidelines in money market funds. $5.3 trillion is a lot of cheddar, my friends. But that cash is starting to come off the sidelines to participate in the stock market rally. Last week, money market funds just saw their first net outflows in 2 months. Now, that is pretty gosh darn interesting, right? People are starting to look at all the money being made in the stock market and they're going, well, my 5%, it's pretty cool. However, I would like to make 20 or 30 or 40 or 50 or 100%, which is what a lot of these big tech stocks and a lot of big cryptos have done this year. Next point, the Fed is almost finished hiking. The main reason for risk assets to crash in 2022 is the Fed's tightening cycle. The Fed has delivered 25 basis point rate hikes in its fastest and most aggressive hiking cycle in history. So the TLDR of this, everyone's bearish, but the recession has been front run. AI revolution is real. The Fed is almost done and the market is cash heavy, right? So there's no reason for a changing of a bullish stance. Very, very interesting. Now, I like that perspective. I like the perspective that actually we've seen plenty of bearishness already. We've seen plenty of dysfunction in markets. We've seen plenty of terror and fear, and a lot of things broke and a lot of things went crazy. But look at what's actually happening. Try to understand the dynamics of new technology being formed up and stuff like that. So the more I've looked at it and thought about it, the new Great Depression seems like a less likely scenario currently. Maybe in a few years' time, we'll see how it goes, of course, but perhaps we do have that either. Maybe they really do avoid a recession. It's always possible. We're going to an election year next year. I'm sure the US Democrats would not love to have a recession on their hands going into that election. So maybe we either have a very short, shallow recession or no recession at all. And if we do have that short, shallow recession, there's no reason that we can't see markets actually pump during that time, because there is plenty of precedence for that to happen. So that's pretty interesting to think about. Let me know what you think about that, though, down below in the comment section. Will we see markets pump even if a happens? Okay, now before I finish up the stream today, if you got questions for me, throw a few questions in there. I will try to have a quick chat with you guys who are sticking around for the live stream, who have given a bit of your time today. Thank you very much, by the way, for joining this live stream. I hope that so far it's been an interesting conversation for you. I've been having fun. I hope you have been having fun as well. So if you do have some questions, go ahead and pop them in here, and I'd love to answer a few questions for you guys here in the stream before we finish up for today. Crimson Caravan, how is Lark today? Today is a good day. Today's been a very good day overall. So, cannot complain. Thank you for asking. But do put your questions in here if you want me to talk about a certain coin or not. RC asking, have you heard of Holochain? I made a video on Holochain. God, it must have been 2018, something like that. But I honestly have not looked at it since then. So, it's been a while. JC Merlob asking, what is your number one altcoin? That's a tough question. I mean, look, you can check out my portfolio right in the disclosure section down in the description of this video. I own a few different coins. Some that I've been pretty interested in recently. I made a video just maybe a week ago or something talking about, 4 coins better than Ethereum. Right. And basically, that was looking at Avalanche, Injective, Arbitrum, and Oasis. So, those are some that I've been kind of more bullish on recently, paying a bit more attention. I'm using Arbitrum a lot personally in the last few months. So that's been kind of a reason for me to want to own some of their token, even though it is kind of a crap governance token. But, narratives will pump up. I mean, look at all the crap governance tokens that pumped like crazy in the last bull market, right? FYBA. So rather than ask what specific coins you're bullish on, here, let's put this up. I forgot to put these on screen here for you guys. So rather than ask what specific coins you're bullish on, I'd like to know how long you'd expect to be bullish on the market and overall the asset class. Well, I think crypto as an asset class is going nowhere. I mean, we're only going to see it get bigger and bigger and bigger over time. We're going to see a lot of coins, of course, fade off into irrelevance during all of that. But the next market cycle, I mean, if we go from the Bitcoin halving until the peak, that's 12 to 18 months, right? Maybe we see some things come in that make it go longer or make it end sooner, but 12 to 18 months would be my general thought, which is funny because actually the reality in markets is bearish market periods, accumulation periods when prices are lower, actually the norm. That's actually where we spend most of our time. The bull market's actually the aberration, the mirage in the desert of good times. And if you don't take profits, they turn into bad times real quick. So remember to take profits. RC, do you think Litecoin will do well at long term? I'm not a big Litecoin fan. I've actually got a trade open on Litecoin right now, but that's just based on the current narratives. I think there's a lot of coins much better than Litecoin out there. No hate against Litecoin. If you guys are into Litecoin, I mean, by all means, rock that party. It's just, I used to be more interested in Litecoin. I've seen so many other things happen in crypto since then. I'd much rather just have Bitcoin, to be honest, compared to Litecoin. Litecoin's got its use cases. It's fine. Nice, solid proof of work coin. No complaints about Litecoin, but not in my portfolio personally. Unanimous, asking Lark, what's your current thoughts on Polkadot and Solana? Polkadot, it's an interesting situation. I staked, I suppose not staked. I bonded all of my Polkadot in auctions, right? Chain auctions. And so I'm going to be getting it released, I guess, sometime this year. Is that already happening? Has it already been 2 years? That's crazy. Anyway, that's coming up in the not so distant future. So when that happens, I think we're going to see a big sell-off because, Polkadot's been doing a lot of stuff in the background, without a doubt, right? But I don't think there has been really enough massive demand there in order to really get, giant amounts of dot driven into these parachain auctions, right? So I think the first ones were really big and exciting. We had Moonbeam and a few other really, really big ones in the early days, and then kind of faded off. The excitement kind of faded off around Polkadot, and other narratives kind of popped up. So we'll see. I mean, Polkadot's playing in a pretty crowded space right now. I suppose I'm around break even at the current prices on Polkadot. Obviously, I'd love for a nice bull market to come back in and be able to sell my dot into strength. But I think I will sell my dot when it gets released from the bonding process. I think a lot of the people probably will too. So, but we'll see how that plays out. Maybe something happens between now and then to convince me not to do that. But like I said, hopefully we get some nice bullish market action so I can sell that into strength in the market and get some nice profits back out of it. Average Joe, are you looking through any small caps that haven't been through a bull run yet? I mean, look, there's a lot of great small caps that are popping up right now. I mean, there's too many to mention here in the stream. Check out the newsletter. We talk about these kind of things. We're sharing all kinds of altcoin alpha over there. But I'll just mention a couple real quick that I've kind of been keeping my eye on, right? And these are one's an Arbitrum ecosystem play, others an Ethereum one, but we're seeing a lot of these new coins and very high risk stuff, right? I don't own either. Well, okay, technically I own $50 of Radiant Capital or something like that. But Radiant Capital is one. It's a money market on Arbitrum, and they've been doing some pretty cool stuff. Will they be able to get enough market share and be that early mover advantage in the Arbitrum ecosystem to make it matter? We shall see, right? But they're an early player. They haven't gone through a bull run yet. Another one is was it Libra Finance? They are a stable coin backed by staked Ethereum. Pretty interesting idea. I like what they're doing. It's pretty cool. It saw a lot of excitement in the early days. We saw huge amounts of the token being released and push the price down. But it's an interesting idea. I have been going back and forth. Should I farm some? Should I not farm some? But I haven't done that yet. Another interesting one coming up that hasn't actually released yet. It's called Prisma Finance. So I'm an investor in that one, a private sale investor in that one, and I think it's going to be doing some pretty interesting stuff. So they're not released yet, but keep an eye out for it, and I probably will be farming some of that as well when it does release their product. So something to keep an eye on. What else do we have here? Oh boy, we'll do one or two more questions here, and then we will finish up for today. What will the Bitcoin value be at the next halving? I know exactly the answer to that. 1 Bitcoin at the next Bitcoin halving is going to be worth 1 Bitcoin. Probably not the all-time highs, though. That's not the answer you want. But probably not going to be an all-time high unless we get a Bitcoin ETF approved before then. Then we could see a new all-time high, which would break, by the way, the Bitcoin 4-year cycle theory. Or at least once we would do it. But I think the Bitcoin 4-year cycle theory is going to be less and less important over time because it's simply not going to have the impact in terms of supply coming to the market when we have such high demand right now. So something to keep in mind. Last one for today from Gabriel here. Do you trust BlackRock? No, absolutely not. No way. I've made some videos on BlackRock before, and look, it's easy to go a bit overly conspiratorial tinfoil hat in videos, right? But look, you got to keep it real. They're a massive financial institution. I don't trust BlackRock any more than I trust JP Morgan or Goldman Sachs, and I don't trust them at all. So you have to keep this in mind. These organizations, they're not here for us, right? They're here for their own interests. They're not here for the crypto revolution, not here for the Bitcoin revolution. They're not here because they're, cypherpunks who want to, change the world for the better with better monetary policy and, empowering people in developing countries. They don't care about any of that stuff, man. They just see a way to make some money and potentially to gain control over the asset classes, into corner markets, manipulate markets, right? JP Morgan, famous market manipulator, right? These guys are experts at manipulating all markets, and they've done it, and they've been fined and caught for doing it so many times, it's not even funny. And we see BlackRock pushing their agenda all the time on different companies that they have massive stakes in because they can, because they control them, because they do own the world. And so them getting to Bitcoin is a real double-edged sword. Okay, guys, that's it for today. Thank you so much for joining me. Make sure to subscribe if you're not subscribed already, and I will see you in the next stream.